Hi guys, welcome back to my channel. So guys, in today's video I'm going to be sharing my risk management strategy with you, which will help you never to blow an account again. As you already know guys, that profitability in forex trading doesn't depend only on strategy. Like, as a matter of fact, strategy is just 10%. So if you want to become profitable in forex trading, your risk management game has to be on point. What is risk management? What is risk management? Risk management is simply understanding the risk you take in any given trade, knowing fully well that the outcome is not certain. It could be a win, it could be a loss. So understanding your risk in any given trade will help you manage your risk properly. How do you manage your risk? In forex trading, there's something we call risk to reward ratio. This risk to reward ratio will help you in managing your risk. And once you understand this, it will put you ahead of the market. You can imagine trading an account and your first two trades were losses. What is going to save you is this risk management, because your next trade could be a win, and with proper knowledge of this risk management, that one win will cover the two losses you had. Let me illustrate further. So having proper understanding of this risk to reward ratio, let me show you what win rate looks like. Let's assume your win rate is 50%. We'll be using the abbreviation win rate 50%. And then let's say the account size you are trading is a $10,000 account. Remember, your strategy has a 50% win rate. Account size is 10,000, and we are trading for a month. Let's say you had 10 trades for the month. So the numbers of trade you took, I'm going to be writing it as numbers of trades. Okay, account balance or account size. Trying to space this out so that it won't look jam-packed. So numbers of trades, let's say in a month you took, okay, let's use 20 trades because it's more realistic for a month. So let's say in a month, the numbers of trades you took were 20 trades. And because your win rate is 50%, so out of these 20 trades, your wins, you won 10 trades, or 10 trades went in your direction, and then your losses, also 10 trades because of the 50% win rate, which means out of 20 trades, 10 trades were wins and 10 trades were losses. And then this is where this risk to reward ratio comes in. And then your risk to reward for these 10 trades were, let's use a minimum of 1:2 risk to reward ratio. 1:2 risk to reward ratio. So we'll stick with this. And then your risk per each of these trades, let me write it, risk per each of these trade happens to be 1% of your account. Popularly, we do 1% of our account, so 1% of your account. What this 1% means that each of these trades, this is a 10,000 account, 1% of 10,000 is $100 or 100. If this 1% stands for 100, which means these 10 trades you won will now be equal to 100 times 10 is 1,000. Then 1,000 times 2, because of these 2, will be giving us 2,000. Which means because of this 1:2 risk to reward, if it was to be 1:3 risk to reward, it will be 3,000. You understand? So since we are doing 1:2, and then these 10 losses, and since each trade you lose 1%, you understand, which is this one, and then each trade you win, you are getting 1:2. That is why this 1,000 got doubled. So which means these 10 losses means that you lost 1,000. At the end of the month, this is what you'll be having. So we're going to say total of 1,000. So this is what should be coming out at the end of the month, all because of this risk to reward ratio. Despite the fact that your win rate was just 50%, but at the end of the month you still came out profitable. So let's assume that your risk to reward happens to be 3, and then what it means is that out of these 10 wins, multiply it by 3, it will be giving us 3,000, and then your balance, the total profit and loss left, it will not be 2,000. You'll be coming out, because this 3,000 minus will be coming out in profit of 2,000. Okay, let's do something more realistic. Let's just leave this to 1:2. Leaving this to 1:2. So guys, let's check another win rate. Let's assume that your strategy has only 40% win rate. This is worst case scenario. What this 40% win rate means is that out of these 20 trades you took, you only won in 8 trades, and then your losses were 12. It should not be giving us, with the help of this risk to reward ratio, this is what we'll be having, 1:6. You understand? Because if 8 trades you made 8%, then because of this 1:2 risk to reward, it will not double, which will not be giving us 1:6, and then you lost 12% of your account, and that 12% simply means 1/2. So guys, if your win rate is 40%, and then out of 20 trades in a 10,000 account size, your wins were just 8 trades, you won in 8 trades, and then your losses, you lost in 12 trades. At the end of the day, you still come out profitable. This is what you'll be coming out for at the end of the month, which is still very nice. This is where risk management is very important in trading in order to become profitable. If you're aiming to become profitable, you have to take your risk management game very serious. So guys, let's assume in this 40% win rate, and it happens that your risk to reward ratio is now 1:3 risk to reward. What it simply means is that 100 times this 8 is 800. Then 800 times this 3 will be giving us 8 times 3 will be giving us 4, right? 24. Then it will now be 2,400, and then you lost in 12 trades, which is still that 1%, which is 100 times 12 will be giving us 1,2. Total balance that you'll be coming out with at the end of the month is simply this 24 minus 1,2 will be giving us 1,2, which is still very good. So having a proper understanding of this risk to reward will put you ahead of the game, and it also puts you way ahead of your losses. You understand? Entering a trade and knowing that one trade can cover all your losses because of this risk to reward ratio. So guys, I already made a video about how to calculate pips and lot size. If you've not watched that video, please go back and watch it, because that is the prerequisite for this risk management strategy. You have to understand how to calculate your pips. So what I'm going to be illustrating, let's do 1:2. This is 30 pips stop loss. So this is 1:2. And you're risking 1% of your account. Okay, let me go to live chat. Let me show you. Let's assume we are on this trade. We entered when market got to this level. Okay, this is 1 hour time frame, and we are doing 30 pips stop loss, and our target is 1:2. 1:2 is the reward ratio. What this simply means is that 1%, this 1% risk means that if this trade should go against us and hit us out, it means that we'll be losing just $100 of our account. But if this trade should go in our direction, with this 1:2, okay, let's do 1:3. This is 1:3. It means that we'll be coming out with 300 profit, but if it should go against us, we'll be losing 100. So this is simply how to demonstrate it on the chart. If this trade should hit here, then we'll be making 300 profit, but if it should go against us, we'll be losing 100 profit. And then let's also assume that maybe the previous trades we took, let's say the first and second trades we took were in loss, and then we finally entered the winning trade. Just this one trade is going to cover the losses. So this is why, this is just the secret of becoming a profitable trader. It all comes to risk management strategy. And when you have a proper understanding of this, your losses won't freak you out, because you know that one good trade can cover up for your losses. So guys, I decided to make video on this risk management strategy because I've been making videos on just forex trading strategies. Because of the ongoing trading and documenting challenge, with this risk management strategy, you can now trade better, because now we are targeting the whole of March to trade and pass our phase 1 and phase 2. I'll also be leaving the link. If you are yet to get your account, I'll be leaving the link in the description box below, so that you can use the link, and both the link of the previous video and the link of how to get your own propfirm account on the description below, so that you can get your account and join us to make this month of March count. And while at it, remember to have better entries. And just in case you find yourself losing, know that losses are part of the game. You can't avoid losses. That is why you need to know your risk management strategy, so that in your losses, you won't, because of the losses, and you can start giving up, knowing fully well that once you analyze a trade that will go in your direction, that it will cover the whole of your losses. So I'm just wishing all of us the best of luck. Thank you so much for watching till this point. Make sure you subscribe to the channel, very important, so that you don't miss out on any valuable content like this I'll be putting out from time to time. See you in my next video, guys. Bye.